In 2025, this is not the year to gamble with your money. It's the year to build a portfolio that laughs in the face of market chaos. Whether stocks crash, crypto moons, or aliens invade the NYSE, you'll be ready. Today, I'm showing you how to build an unshakable portfolio, step by step. Even if you're starting from zero. When I first started investing, my portfolio was 2 meme coins and a savings account earning 1% interest. Yeah, bulletproof, if the bullet was made of marshmallow. But over time, I realized, markets move, economies shift, and unless you build for resilience, you're just rolling dice with your future. In this video, I'll break down the exact steps to create a beginner-friendly portfolio that can survive, and even thrive, in 2025. Before we get into what to buy, we need to talk about the mindset, because an unshakable portfolio starts here. Step 1. Build the foundation, the safety net. Your portfolio can't be unshakable if a single flat tire or vet bill wipes you out. Rule number 1. Build an emergency fund. 3 to 6 months of expenses in cash or a high-yield savings account. This isn't investing money, it's your life jacket. Without it, you'll be forced to sell investments at the worst possible time. Imagine you're 100% in stocks, the market drops 20%, and your car breaks down. You sell low, locking in losses. The safety net prevents that. Step 2. Diversify across asset classes. In 2025, relying on just one asset is like having a single leg on your chair. It's going to be wobbly. Core assets to consider. Stocks or equities, the growth engine but volatile. Bonds, stability and income, government or high-grade corporate. Cash, optional beyond your emergency fund, for flexibility. Alternatives, REITs, commodities, maybe 5 to 10% in crypto if you understand the risk. Rule of thumb for beginners. The more you need stability, the more bonds you hold. The more time you have, the more stocks. If your portfolio is 90% in one tech stock because it can only go up, congratulations, you're not investing, you're praying. Step 3. Think globally. 2025 isn't just about your home country. One country's economy can struggle while another booms. Invest globally using ETFs like VT, the Total World Stock, or region-specific funds. You're not just betting on the US, Europe, or Asia. You're betting on the whole world's progress. Remember, Japan in the 90s versus the US in the 2000s. No single market always leads. Step 4. Automate and stay consistent. The market's best-kept secret. Boring consistency. Set up automatic contributions into your chosen funds every month. Rain or shine. Dollar cost averaging. Buy regularly regardless of price. It smooths out volatility and removes emotion. It's like going to the gym. You don't wait for the perfect weather, you just show up. Step 5. Protect yourself from yourself. The number one portfolio killer isn't inflation or taxes. It's bad decisions made in fear or greed. Tips to avoid self-sabotage. Don't check your portfolio every day. Set rebalancing reminders every 6 to 12 months. Have written rules for when you'll sell, and stick to them. Investing is 10% strategy and 90% psychology. Final checklist recap. Emergency fund. Diversify across asset classes. Think globally. Automate and stay consistent. Control your emotions. Do this, and your 2025 portfolio won't just survive market storms. It'll dance in the rain. If you want a deeper breakdown of exactly which ETFs I think are best for beginners this year, I've linked my beginner's ETF guide video right here. And if you found this helpful, smash that like button. It tells YouTube to show this to more future millionaires like you. Subscribe to BrokeToBeta, because we're turning broke into bulletproof.